Imagine if your credit cards, cue the fire by the way, just stopped working. And not just credit cards, any kind of cards we are talking about. And I'm telling you, no one is prepared or ready for what is coming because they don't understand the credit system. I mean, everything that you do is credit. It is a debt-based system, and it's beginning to lock up just like it did in 2008. And everyone keeps looking at the stock market as it's the barometer, which if you held snap, oh snap, you just lost most of your portfolio. But I am referring to the bond market, which it's very big. It's the entire world. It makes the stock market look like a small child. I mean, even when you take this stuff, right? You go to your bank and you're like, yeah, I would like to deposit something, right? They pay you interest. You charge your credit card. There's interest. Every time a transaction is processed in a credit system, there's interest. To keep this system going, you need oil to you know, the cranks or whatever. I failed auto. But you need bonds. You need pristine collateral, and they're removing it. And let me just show you the derivatives market. And you need stuff, you need collateral to run this thing. They're giving it, Investopedia is saying 1 quadrillion, okay? You're like, oh, what's that? It's like a trillion. It's a word. But when you can see and how this whole thing is going to come down, oh, hey, silver, where... You may want to consider having money. Cryptocurrency. Look at that. It's itsy. Wait. Military spending, U.S. budget, coins, banknotes. This is fake stuff. Everything, all this fake. It's all fake. Fake balance sheet. Billionaires. Gold. Look at the difference between gold and silver. Just a thought. You may want to own some. Stock market. There's the stock market. Money supply. Global debt. Oh wow, that's pretty big. How about real estate? That's pretty big. Well, except when you subtract what China is going to be and what we currently are going to go through. Ooh boy, this is going to be beautiful. But now here we go to derivatives. I could scroll. Look at this. I can do this all day long. Moving. It is ginormous. I mean, look, one of these little squares is silver. This, which I can just is the derivatives market. When you see stories like this should frighten you. This is from Market Watch. Fragile treasury market is at risk. Okay, the treasury, that's the debt market. Large scale forced selling, or surprise, that leads to a breakdown. Bank of America says, and I'm telling you, it's going to. How do I know this? Is because I'm watching it happen. The same thing happened in 2008. That it's like, I couldn't make it more similar. Like these guys that sit in these big chairs, like the Fed, and they have their 400 PhDs. I don't get it. I'm like, do you not? Can you just rewind? I mean, Yellen does the same thing. They just keep screwing up, making the same mistake. Unless there is money to be made from this. Coming in from Bloomberg, look at this. The Fed is playing a dangerous game. The central bank is raising rates too high. Do you see how they weren't raising them at all? And us, that understand how markets work, are like, dude, you guys are so far behind. You need to be raising rates now. They're like, nope, this is great. Like, I don't know how they don't see what they create and then the aftermath. It's like you go back to, you know, when the cough, the vid, and they're like, oh, I don't think locking everyone down for a few weeks, it's only going to take 2 weeks, and why don't we just dump 2 to 10 trillion on everyone? Look, it did nothing. Well, right, it didn't do nothing then, but then fast forward, all hell broke loose. What they are doing now, they're like, it looks fine. 7% interest rates. I don't see any problems yet. And then I got my trolls. They're like, oh, the world hasn't burnt down yet. Bravo, bro. People are like, oh, earnings were good. You said they were going to be bad. Wait until you get to this line. See, it's what they do now affects 14 months. So we'll talk in May about earnings. So you haven't felt it yet. You haven't felt interest rate 7%. Housing market. My uncle just sold his house. Yes, I know, Jimmy Bob, but in a year from now, it's not going to be what it was now. It's like a tsunami. It starts and you're like, I don't see anything. Looks fine to me. Everything's great. And then all of a sudden it's not. So everything that I talk about is always in the future. And it's really confusing because people are like, well, it's okay right now. I'm like, no. You wait. You can't drop 10 trillion into people's pockets or 2 trillion and expect, I think it's transitory. You can't lock up China and not the supply, like, supply and demand. You can't have that. That's why everything is going the way it is. And it takes a long time to play out. Even the housing market, the car market, right? That you're still like, I want to get that car for free. It takes time. The dealers are still suffering from recency bias. They're like, this is fine. We'll just keep raising the prices. Okay, go ahead until you file for a thing called bankruptcy, and then it all goes on the lot for, well, not for free, but it's definitely discounted. And I come onto the tubes and I predict the future just based on the past. It's kind of easy. And then when it comes to charts, I said the S&P 500 is going to sell off. And then I said it's going to bounce right on that little blue line. Oh, hey, look, it did. How do I know that? Well, I'll turn on the 200-week moving average. Okay, I said it's going to find support. That's actually the video I am filming right when I'm done with this in my brand new bear market course. Grab it, $200, so you can understand how markets are gonna move in the future and now. And dang, even when I say 200, please, I'm a baby. Take candy from me. It's trust me, that is ridiculous. Now you're like, but why did the market bounce? Okay, well. Markets will always, charts will always predict the future. So I can look at that and go, here are the probabilities. You got an 80% on this one. But everyone wants to know, what happened today? What happened today? Okay. More than likely, there's a probability that this guy or someone at the Fed, okay, texts these guys, the Wall Street Journal, and this story. It could be. I don't know. I'm not that inside. Fed set to raise rates by 0.75. See, they tell the market to do it, and then the market does it, and then they have to run up and catch up to it. It kind of looks like they're in control, but they're really not. But it's okay. That's for a whole nother videos that I've done before. Rates by 0.75 point, and here we go. Debate. What is the size of future hikes? And then everyone gets excited that the Fed is going to stop. And I say they're not going to stop. And I've been saying this for a long time. They don't stop until something breaks. They just wait for it. They're like, and when this one breaks, and the longer you hold us under the water, okay, until there's no bubbles, we may not come up. And so I always say, look at the charts, not at the news. But this is your little boop. And here it is. Some officials who have begun signaling, their desire to slow down the pace of increases, because everything's the wheels on the bus are starting to fall off soon, and stop raising rates early next year to see how their moves this year are slowing the economy. But these idiots keep looking in the rear view mirror and they're like, wow, look at this inflation. And I look at the charts and I look forward and I go, wow, the whole bus is going to catch on fire. I mean, I could even take this story. Grant and his wife paid down almost all of their credit card debt. Congratulations, early. Can't use it. I'm still not going to use that word. And finally felt like they were getting ahead financially. Okay, that's looking in the rear view mirror. More debt, higher fees, credit card borrowers facing mounting burdens. So you can't look back. You got to look forward. And I'm telling you, everyone has drained their savings. Debt is through the roof. And when I say through the roof, it's the highest it's ever been. You just went from the lowest it's ever been to the highest. The consumer is getting ready to dive out a window. And the only way to fix it, as per government, well, one, you need oil in the system. Start going with the bonds, start going with the bills, and start giving people that debt, which you call money, so they can survive, because they're not surviving. This entire debt-based system is musical chairs, and it keeps removing chairs every single day. And then people don't have a place to sit. And that is why you see rampant homelessness. And you're going to go from people having a lot of jobs. It's actually one person has 5 jobs. I had an article that it's forcing everyone to get more jobs. That is the system you are in. Why do you need a more job? Because you need to pay more. The system is tax on interest. So money has interest. It shouldn't, but it does. And it's a debt-based interest, more, and it needs to produce more, which is crazy. You know the US debt clock? I can guarantee you it will always go up because it's a debt-based system there, Bob. But we're going to go from people having jobs to not having jobs to, oh, Musk. Hey, how's Twitter? Hopefully you guys aren't working at Twitter. You'll know this by looking at your hair color. If it's blue, yeah, there's a high probability you're working there. You probably won't have a job soon. Musk plans to cut Twitter workforce by only 75%. And actually, to save these companies, you better be cutting a lot, because you're a liability. It's tough to pay you, especially when the numbers, not yet, you wait. I know we had an earnings on Snap. My apology. That actually didn't even look too bad, right? You're like, oh, that's not so bad. Look, it just dropped a little bit. How about 30? That's 30%. That's actually nothing. That's the 200. You definitely, bear market, trade it like a bear market. You get under that 200 week, that's money. Oh, and hey, look, it bounced. I could do this all day long. It's actually, what was it? 4-time floor. You know how I say that? 1, 2, 3. You got 1, 2, 3, and floor. And I was actually trading Snap quite a bit in that bull market. That was a fun one. And here, let me show you again. Even though you're not in the course, I'll teach you anyways. It's going to come up. Once it breaks the 200, it's going to come up and retest it and get rejected. Get it? I mean, Snapchat was at 83. Wait, hold on. Maybe there was someone that put in, I changed my candles. Okay, not too crazy of a wick. Oh, that was confirmation right there. $83. And now it's 7. And my people that do fundamentals are like, the fundamentals are there. Everyone's on Snapchat. They have a great leadership team. That's all noise to me. I'm sorry. Give me a chart any day. And actually, let me turn on one more line just to help you in case you're like, I don't got $200 for a bear market course. See that E? That's exit prior to earnings. See, that's the 200 week daily. Sorry, now I'm like, we're in a bear market, so it's like weekly. Do you see what happened? The minute you cross that, bye-bye, trade it going down. Although that gap would have just caught everyone. Unless you listen to me. See the E? That means exit. Just by listening to me on that one, I could have saved you how much? 29%? Okay, I'll give you 1 day on that one. I could have saved you 25% on car insurance. And I don't know why it was so difficult to say car. I struggled at the word car. So, okay, now let's go back. Let's go back to China. You know how they're like, lockdowns. This is safety first, kids. And I'm like, freedom first. China, factory of the world, is losing more of its manufacturing and export dominance. Latest data shows. And I thought I would never say this, but I think China is dead in the agua right there. It actually has to do with their chips. The latest CNBC supply chain heat map shows China is losing more manufacturing. Vietnam, okay, we got that. And then America, exports, furniture, okay, you got that one. Apparel, footwear, travel goods, handbags, oopsies. It's the minerals to create those chips. They don't got them. And science and technology, which they don't have, declining. See, we're creative over here. That's the one thing about America, is we're creative. They are just robots. I'm sorry if you're watching this from China. China's zero policy is a big factor. Yeah, but it seems like great at first, but damn the repercussions. Oh, and just in case you wanted to see a heat map, I'll find it for you. Also, can you get that helpful? And do I ask? Apologies. I hate it. I get nothing, and videos don't get pushed. And then I ask, I'm like, oh, hey. And then you're like, why do you always ask? It's so annoying. Furniture. You got footwear, travel goods, handbags. My wife, she's really good at that one. You guys, my entire point in this entire video is what you do now has ramifications later. So what the Fed has done is going to have, I don't even know the word. You'll see it. Again, you go back to 2008, the banks were all like, markets froze. It froze. Everything. The entire market froze. I'm not talking just stock market, the credit, the bond, everything, no transactions, no banks trust each other. And that's what's happening now. They're all lining up for cash. Oh, but here, existing home sales fell 10-year low in September. It's gonna get worse. Get it? Thank you guys for everything. I love you. Enjoy the weekend, and I'll see you tomorrow.